Hello, future chartered accountants. I hope you are doing well. Now, before we go further, first we will revise what we have discussed yesterday. So, what do you mean by buyback? Buyback means purchase of its own equity shares by a company and then they cancel those equity shares. And they cannot hold those equity shares as an investment. It means that when the company repurchase their own share, they have to cancel it. They cannot show it as an investment on asset side of balance sheet. What are the benefits of buyback of share? To increase earning per share, to increase promoters holding, to support the share price and to pay surplus cash. So we can do buyback out of fresh issue of shares or out of profit. But when we say they can do buyback out of fresh issue of shares, it means that they are issuing some shares in the market. And when we say they are buyback out of profit, it means that they have to transfer the face value of buyback of share to CRR account. They can transfer to CRR account by utilizing free reserve and they can utilize securities premium as well. So second point is that when we do the buyback, same class of shares cannot be issued in the market. So suppose if we are doing buyback of equity shares, we can issue preference shares in the market. Then there are some other points. It should be authorized by article. There should be special resolution. And there are some other tests also that we will discuss maybe today. Resource test, share outstanding test and debt equity ratio test. We will discuss about it. Now, when we do buyback, the shares should be fully paid up shares. And there should be a gap of 1 year from previous buyback. It means that within a year, you can do only one buyback. One time buyback, I mean. Okay. Now, you can purchase the shares. You can do, when you do the buyback, you have to purchase the share. You can purchase from the existing shareholders. You can purchase from the open market, that is from the stock exchange. And you can purchase also from the employees, because when we sometimes issue shares to employees as well. So now we are repurchasing those shares from employees. So here, when we do buyback out of profit, the face value of buyback of share should be transferred to capital redemption reserve account. Now we have also discussed, and CRR account should be utilized only and only for the purpose of bonus issue. Now remember, what is this premium on buyback? The additional amount that we have paid at the time of buyback. Suppose the face value is of rupees 100 and we have paid 150. That 50 is the premium on buyback. Okay, the additional amount, the amount that we have paid over the face value of shares. What we call it premium on buyback. Okay, now we have discussed about the journal entries also. The journal entries on buyback of shares out of profit. So first we have to purchase the share. The purchase of equity shares. So we have purchased the equity shares. Equity share buyback account debit. We have purchased the share and you have paid amount for it. So equity shares buyback account debit to bank account. Now we have to cancel it. So when we do the cancellation, share capital will decrease. Decrease in capital, debit. Decrease in capital, debit. So equity share capital account debit. Decrease in capital, debit to equity share buyback. So when you have purchased it, you have debited equity share buyback account. And then you have cancelled it. You have cancelled. So first you have debited and then you have credited here. So decrease in capital, equity share capital account debit to equity share buyback account. But sometimes it may happen that you have purchased these shares from the market at over the face value. Suppose the share is of rupees 10, but you have purchased at rupees 15. So when you do cancellation there, share capital always be recorded at face value only. So when you do cancellation here, equity share capital account will be debited because we record share capital at face value. So here equity share capital account will be debited. It will be debited by face value only. Suppose you have paid 15 rupees. So remaining 5 represent premium on buyback. So premium on buyback account debit to equity share buyback. So you have debited here equity share buyback and we will credit here. So whether you have purchased at par or at premium. If you have purchased at premium, so when you will do the cancellation, remember the equity share capital account will be debited by face value only, and the additional amount that you have paid, that will be debited to premium on buyback account. Now, this premium on buyback account will be adjusted against, it can be adjusted against securities premium account, it can be adjusted against free reserve, that is profit and loss account surplus balance or general reserve. So you have debited here premium on buyback account. Now you will credit here premium on buyback account. You will cancel it. In other words, you are adjusting or you are writing off premium on buyback account against securities premium or profit and loss account and general reserve. Now, if you are doing buyback out of profit, so by law, we have to transfer the face value of buyback of shares to a CRR account. So when we transfer to CRR account, we can utilize free reserve. Free reserve means any reserve that can be utilized for the purpose of dividend. We call it free reserve. So here example of free reserves are general reserve, profit and loss account. So we will debit to general reserve account debit, profit and loss account debit, securities premium account debit. Securities premium account debit. What do you mean by securities? Why we are debiting it? Because we are transferring from these reserve to CRR account. So here credit to CRR account, increase in reserve, and you are utilizing this reserve. That's why you are debited to this reserve. Okay, but we can also do buyback of shares out of fresh issue of shares. So entry number 1, 2 and 3, it will be same. 1, 2 and 3, it will be same, and there will be no fourth entry here. No need to pass the entry of transfer to CRR account, because when we do buyback of shares out of fresh issue of shares, when we do general entry on buyback of shares out of fresh issue of shares, it means that no need to transfer to CRR account. We transfer to CRR account only when we do buyback out of profit. So here we are doing buyback out of fresh issue of shares. So entry for issue of shares will come. When issue shares in the market, amount will come. So bank account will be debited. So bank account debit to share capital account. But when you issue shares at premium, so entry will come, bank account debit, you have received the amount, bank account debit to share capital account to securities premium. We are issuing shares here. So you will receive the amount. So amount will come, so bank account debit to share capital to securities premium. Now, before we come to a question, there are few points that I want to discuss with you. When we will solve question, you will see some points will come on sale of some investment. It may happen. So before I come to question, we'll discuss about that also here. So write it down. Now write it down. This is my page number 6. This is the book, class book. Okay. The book, the study material of BB Virtues. Okay. So write down here, journal entry on sale of investment. Journal entry on sale of investment. Okay, journal entry on sale of investment. Draw this for 5-6 lines. Draw this for 5-6 lines. Okay, so which account should be debited? See a debit column and this is credit column. Which account should be credited? Okay, now understand this point. So, okay, first is sale of investment. Sale of investment. Okay, suppose the price of investment, suppose the cost of investment is rupees, suppose 10 crore, and you sell at, suppose the cost of investment is rupees 10 crore and you sell at rupees, suppose 12 crore. So don't you think the cost is rupees 10 crore and the cost is how much? 10 crore, and you sell at rupees 12 crore. It means there is a profit of rupees 2 crore. There is a profit of rupees how much? 2 crore. So how we are going to record it? So profit of rupees 2 crore. So how much amount you have received on sale of this investment? You have received amount of rupees 12 crore. So entry will be here, bank account debit. You have received the amount. So bank account will be debited by rupees 10 crore. Which account will be credited? Investment account. But investment, what is the cost of investment? 10 crore. So here you will credit to investment account. You will credit to investment. This value bank account debit means amount that you have received. In our case, it is 12 crore. To investment account, that will be the cost of investment. Okay. And profit and loss account. Profit and loss account. This is amount of profit on sale of investment. Profit on sale of investment. So bank account debit to investment account to profit and loss account. Which account should be debited? Bank account by the amount received. Which account should be credited? Investment account with the cost, or if WDV whatever at whatever value it is recorded, to investment account and to profit and loss account, that is profit. So profit we credit to P&L account. So profit part will transfer to profit and loss account. Now second point here, it may happen that we sell the investment at loss. So they will give you information in question and they will tell you the investment is sold at loss. So point number 2 here, point number 2. Now here sale of investment. Let me write sale of investment at profit here, and sale of investment at loss. So let me give an example of loss. Suppose the cost of investment is rupees 10 crores and you sell at rupees 7 crore. It means there is a loss of rupees how much? 3 crores. So how we record this sale of investment at loss? This one. Okay. So you have received the amount. So bank account debit. So bank account debit. So it will be debited by bank account. It will be debited by amount received. How much amount you have received here? 7 crores. In case of loss, I am saying. How much is the loss? 3 crore. So that loss should be debited to profit and loss account. This is a loss amount. Okay. What is the cost of investment? 10 crore. That will be credited to investment account. So which account should be debited here? Which account should be debited here? Bank account with the amount received. Which account should be debited? With the P&L account with the amount of loss, and to investment account. All of you understand this? Okay. So this is about sale of investment. So we have discussed journal entry about what entry do we pass when we do buyback out of profit, when we do buyback out of fresh issue of shares, at entry on sale of investment. Why we are discussing here the entry for sale of investment? Because when we will solve question, so sometime they give you adjustment for the sale of investment also. Now before we start question, one more point that I want to discuss with you, that is journal entry on issue of bonus share. Now bonus shares is a new concept for you. Why is new concept? Because previously in old syllabus there was a chapter bonus issue. Now this chapter has been shifted to CA foundation level. So you don't have idea about what is this. Bonus shares means that we are issuing free of cost shares to we are issuing shares free of cost to existing shareholder. We call it bonus shares. But you have to know what entry we pass in case of bonus shares. When we give bonus share, what entry we pass. So first we'll discuss about the concept of bonus share, and then we'll discuss what entry do we pass in case of issue of bonus shares. Okay. So give heading there, journal entries on issue of bonus shares. Journal entries on issue of bonus share. Remember one thing, before the examination or when we do the revision, you just have to go through all these points that we are writing here. Okay, all the adjustment, all the discussion I will write here in the concept video. The blank page is given here, study material which is provided by BB Virtual. Just have to write. I am writing it on page number 6, maybe your page number 5, whatever. So you have to write it down. After the completion of these chapters or after the discussion of all the concepts, I will share this PDF also with you. But I strongly suggest you have to write it down. It will help you when you will do the revision. It will help you because you will see all the adjustment, all the discussion at one place. So it will be easy for you when you will do the revision. Okay. Now, first, before I pass journal entries for bonus issue, first understand the concept of bonus issue. What happened here? Suppose there is a company called ABC Limited. There is a company called ABC Limited. This ABC Limited, they want to issue shares to their existing shareholders, and these are their existing shareholders. So what do you mean by these are their existing shareholders? So these are existing shareholders. Okay, these are existing shareholders. Now company wants to give bonus to their shareholders. You know what is bonus? Something free of cost, something additional we are giving. Okay, so here ABC Limited giving some shares to their existing shareholder free of cost. So here we are doing accounting from ABC Limited point of view or existing shareholders point of view. No, we are doing accounting here from ABC Limited's point of view. ABC Limited point of view we are discussing here. What entry ABC Limited? What about existing shareholder? What entry they will pass? Existing share accounting we will discuss here. Accounting of shareholders, those who are receiving these bonus share, they will do accounting as per accounting standard 30, that is accounting for investment. So here in this chapter we are not discussing about accounting from existing shareholders point of view, or you can say investors point of view. That will cover in accounting standard 13, that is accounting for investment. Here we are discussing accounting from company's point of view. So accounting from company's point of view, I am discussing here accounting from company's point of view. Okay, accounting from company's point of view. Now understand this. Now you tell me, when the company issues shares, normally when company issues shares, what entry they pass? Because they receive the amount, they have received the amount. So what entry they pass? Okay, what entry they pass? They pass entry bank account debit. Don't write bank. You don't write it. Okay, bank account debit, because I will do some changes here. Bank account debit to share capital account, because they issue the shares to share capital account. So bank account debit to share capital account. But you tell me whether company has received any amount here? No. Why they have not received any amount here? Because they are issuing at free of cost. So these bonus share, when they issue to existing shareholder, they issue at free of cost. So issue of shares at no cost to existing shareholders. So company issue of shares, they are issuing shares at no cost to existing shareholder. So they are issuing at no cost. Free of cost. So I cannot say here bank account debit. We cannot say bank account debit. Why we cannot say bank account debit? Because company is not receiving any amount from this existing shareholder, because they are issuing this share at free of cost. So here we cannot debit, the company cannot debit to bank account. They should debit to some account, because we follow double entry system. So which account should be debited here? So here we will utilize some reserve and surplus. Here. So instead of bank account, which account will be debited here? Here reserve and surplus account will be debited. Now the question arises whether all the reserve and surplus can be utilized for the purpose of bonus issue. The answer is no. You cannot utilize all the reserve for the purpose of bonus issue. You cannot utilize all the reserve which you have received, all the reserve for the purpose of bonus issue. There are some reserve that can be utilized for the purpose of bonus issue. So this is which are those reserves? We'll discuss about it. I will write it down entries there now. But you understand the concept of bonus issue, that we are issuing shares free of cost to existing shareholder. So we cannot debit to bank account because we are issuing shares at free of cost. So here now I am discussing about the journal entry. Just give me one. Okay. So draw this for 6-7 lines. Now understand this one. So which account should be debited and which account should be credited? Okay, understand. First point here, utilization of reserve for issue of bonus shares. So utilization of reserve for issue of bonus shares. You can understand this point. What happened? We cannot debit to bank account. We have to utilize some reserve. So which reserve we can utilize? You can utilize. Do you remember? Yesterday we discussed about the CRR account. What is CRR account? Capital Redemption Reserve Account. What is this CRR account? Capital Redemption Reserve Account. So what is this CRR? CRR we create at the time of buyback of shares. So when we do buyback out of profit. So when we do buyback out of profit, as per law, we have to transfer the face value of buyback of shares to which account? To CRR account. So we have, if suppose company has CRR account, so they have the CRR account can be utilized only and only for the purpose of bonus issue. If company has CRR account, the company should utilize CRR account here. So you have credited to CRR account at the time of buyback of shares out of profit. You have transferred from free reserve to CRR account. Now you can utilize that CRR account here. So when we utilize any reserve, reserves has credit balance. So when we are utilizing any reserve, we have to debit it. So here reserve and surplus account will be debited. So here, what is CRR account? Capital Redemption Reserve Account. So you can debit to CRR account or you can debit to General Reserve Account also. General Reserve Account, you can debit to General Reserve Account, or you can debit a surplus balance of profit and loss account. Okay. So you have debited to these reserve, and surplus. You can utilize general CRR, general reserve or P&L account. And to share capital, we will credit to share capital account. Don't worry. But before that, we are passing this entry of due. We are liable to pay to shareholder. So we will credit to bonus to shareholder account. We will credit to bonus to shareholder account. So don't worry, we will credit to share capital account. But first we are liable to pay something to shareholder. What we call it? We call it bonus to shareholder account. What we call it? We call it bonus to shareholder account. So here we have credited bonus to shareholder account. Now we will discharge this liability. We are liable to pay to shareholder, bonus to shareholder. This one. Okay. We are liable to pay to shareholder. So here now we will discharge this liability and you will write down an issue of, now we are issuing bonus share. Issue of bonus share. Now we are discharging liability. So we are giving something to shareholder. So we are liable to pay to bonus to shareholder. Now we are giving to something to shareholder. So shareholders are receiver here. So you will debit bonus to shareholder account. Bonus to shareholder account will be debited and we are giving them equity share capital. So share capital, equity share capital, we are giving them equity share capital. So to equity share capital account. Okay. So these two entry will come when if the question talks about a bonus share also. The name of chapter is buyback of shares. but sometimes they give in question adjustment for bonus shares also. Okay, so bonus share. These two entry will come. If you observe here, you have credited bonus to shareholder account here. You have credited bonus to shareholder account. Yes or no? You have credited bonus to shareholder account and you have debited here bonus to shareholder account. So if you observe, you have cancelled. First you are liable to pay something to shareholder and you have discharged this liability. So first you have credited here and you have debited here. So bonus to shareholder account will get cancelled here. So what net entry you have passed? You have passed reserve and surplus account debit. You can utilize CRR account, general reserve account and profit and loss account. So you will debit to this reserve and surplus account and you will credit to which account? Equity share capital account. You will credit to equity share capital account. These are the entries for issue of bonus share. So we have discussed about buyback of shares out of profit, buyback of shares out of fresh issue of shares, journal entry on sale of investment, journal entry for issue of bonus share from obviously from company's point of view. Apart from this, I will also discuss about the redemption of preference. Not right now, after some time. I will discuss about redemption of preference shares also. Now I will discuss about the concept of redemption of preference shares. What entry company pass at the time of redemption of preference shares? You may think so. Why? We are going to discuss about the redemption of preference shares. It is important because redemption of preference share is not the part of your syllabus now. It is not the part of syllabus. Now redemption of preference shares, these chapter they have shifted to, institute has shifted to CA foundation level. But why? Because sometime when we do the question, some adjustment related to redemption of preference shares will come, like some adjustment for issue of bonus shares will come. Okay, so when the adjustment for redemption of preference shares will come, before that I will discuss with you the concept of redemption of preference shares also. So right now you just have to know what entry do we pass when we issue, when we do buyback out of profit, when we do buyback out of fresh issue of shares, and entry for sale of investment and entry for issue of bonus shares. You just have to know these entries. Now I am coming to question, but before I come to question, it is very important that when you prepare balance sheet, the very important point that I want to discuss with you. Okay, remember, now listen, what happened? There are very basic rules, basics. When you before we come to question, the few points that I want that you should know, and I hope you know about it because these are very basic. Still I am discussing it. Just please concentrate here. What happens when they will ask you question? What they will do? They will give you all balances, or I can say they will give you balance sheet. That is balance sheet. They will give you balance sheet. Okay, this balance sheet is before buyback. They will give you balance sheet, and this balance sheet is before the buyback of share. They will give you balance sheet. Now you know that in balance sheet there are two sides. The left hand side is liability side and right hand side is asset side. So here in balance sheet they will give you balance sheet. Okay, so there is the asset side here. So asset has debit balance. Which balance asset has? Asset has debit balance. Which balance asset has? Just one minute. Asset has debit balance. Which balance asset has? Asset has debit balances. Okay. What happens? They will give you balance sheet. There are two. You will see their asset side and liabilities side. And liabilities has which balance? Credit balance. And they will give you some adjustment. So they will ask you to do, they will give you some adjustment, some information they will give you, and they will ask you to pass journal entries of it. They will ask you to pass journal entries of adjustment. So we will pass journal entries. We have discussed about the journal entries here. Journal entries when we do buyback out of profit, out of fresh issue of shares, on sale of investment and bonus shares. We will pass this journal entry according to the information given in question. We will pass journal entries for it. In those entry, if it is an asset account and if we have debited to that account in your journal entries, So what we will do, we will add it. Debit, debit, add. Basic. Listen here. What happened? They will debit, debit. Remember one thing. Debit, you can see debit, debit. What happened when we when you see debit, 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 add. Then debit, credit, less. Credit, 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 add. Okay. And credit, debit, less. Simple math. Debit, debit, add. Debit, credit, less. Credit, credit, add. Credit, debit, less. Okay. Now what happened here? So asset has debit balance. Asset is debit balance that is given in balance sheet. Before the buyback, balance sheet will be before balance sheet of before buyback, they will give in question. So given in balance, asset side has debit balance. And in journal entry that we have passed for the adjustment given in question, if to that account, if we have debited, so debit, what will do? Add. What will do? Debit, what will happen? Debit, what will do? Add. And whatever figures come, that we will write it down in new balance sheet. That we will write it down in new balance sheet. New balance sheet, I mean to say, after buyback. This balance sheet we are preparing after buyback. So whatever figures come, we call it adjusted figure. We will write it down, this adjusted figure in new balance sheet. Okay. Here asset has debit balance. In general entry to that asset account. For example, furniture is asset. It is 10 crore. And here you have debited by rupees 2 crore, suppose in journal entry. 10 plus 2, how much? 12. That 12 crore will write it down here. Now suppose, if to that asset account you have credited in journal entry. So debit balance it has, and we have credited here. So debit and credit. Debit, credit, what will do? Will deduct it. So I will deduct, and whatever figure come, that I will write it down in new balance sheet. So it is very easy to pass journal entries. But when we will prepare balance sheet, after solving some question, you will be familiar with it and it will be easy for you. So what we will do, first remember one thing, asset has debit balance. So debit balance, if you have debited in journal entry, debit plus. Asset has debit balance, so debit, and you have credited it in journal entry at the time of adjustment according to adjustment given in question. So debit, credit, what we will do? We'll do minus. That's why deduct. Whatever figure come, that will the adjusted figure will write it down in new balance sheet. Okay. Now liability side. Liability has credit balance. If in journal entries, if we have credited, now credited, liability has credit balance. If in journal entry you have credit, liability has credit balance. If you have credited, credit, what will do? We will add it, credit, add. Whatever figure come after this adjustment, we will write it down in new balance sheet. Now here, if to that liability account, if you have debited, if to that liability account, if you have debited. So what we will do, if you have debited to that liability account, what happened? Liability has credit balance, and you have debited here. Liability has credit balance, and you have debited here. Credit, debit. What will do? Minus. So here we will less it, and whatever figure come, we will write it down. That we will call it adjusted figure. Okay. So we'll write it down, that adjusted figure in new balance sheet. We'll write it down new balance sheet. New balance sheet means that balance sheet. They will ask you in question to pass. Journal entries of the adjustment given in question, and they will ask you to prepare new balance sheet, that is after buyback. What they will give in question? They will give in question the balance sheet before the buyback, and they will give some adjustment. So we have to pass journal entries on the basis of adjustment given in question, and after passing journal entry, we have to prepare the balance sheet after buyback. So when we prepare balance sheet after buyback, we have to take into consideration the balance sheet which is given, that is before the buyback, general entries that we have passed, and accordingly we have to write it down the adjusted figure in new balance sheet. So this is the approach when we prepare the balance sheet. So it will help you when you will prepare the balance sheet how to write it down the figures in new balance sheet. Okay, you don't have to worry, and remember these three also. Okay, these rules. Okay, so you don't have to worry, because when we will solve question after few question, you will be familiar with. In fact, when we will solve this, when we will solve journal entries here, and when we prepare balance sheet here in buyback of shares, we will prepare balance sheet. Next chapter, that is financial statement of company, where you will prepare balance sheet. Then amalgamation, internal reconstruction. In all these chapters, we are going to prepare balance sheet. So after solving some question, you will be familiar with all these rules, and it will be really easy for you to prepare balance sheet. Now I am coming to questions. So before I come to this, there are few more points that is related to redemption of preference shares that I will discuss later. Whenever the adjustment will come for the redemption of preference shares, before that I will discuss the concept of redemption of preference shares. Now come to question number 1, which is given in your study material, that is on page number 7. You can see in page number 7 from today. Now I will start giving you homework also. Okay, so this C series represent, that is class question. So come to question number 1. What is given here in question number 1? That it is the ICA study material question. Okay, you don't have to worry about the different, no need to refer the different sources. The book you have is more than sufficient, because all the 100% question of ICA study material already covered here. Then RTP, mock test paper, previous examination question, all are already covered in your book. Okay, no need to refer any other book. Okay, now first here, KG limited. If for reference purpose, if you want to refer any book, then I will suggest obviously ICA study material. Okay, now here KG Limited furnishes the following in balance sheet as on 31st March 2021. Remember one thing, every question, when you start any question, even in examination also, when you solve any question, first you have to see what is asked in that question. So directly read last line first. You are required to pass necessary journal entries. The adjustment is given there. We have to pass journal entries of those adjustments, and we have to prepare the balance sheet of KG Limited after bonus issue. Here in this question, bonus and buyback both are given. So we have already discussed about the bonus issue as well. In other words, here we have to pass journal entries and we have to prepare balance sheet. Okay. In every question, first you have to read what is asked in the question. Here it is asked to pass necessary journal entries of the adjustment given above, and we have to prepare balance sheet as well. Now the balance sheet which is given in question, this balance sheet is before the buyback and issue of bonus shares. So this adjustment is before the buyback. This balance sheet is before the buyback. Okay. Now the balance sheet that we have to prepare, which is after the buyback and after the bonus share as well, because in the question the bonus share is also given. Okay. Now remember one more thing. There is a schedule 3. What is the schedule 3 of Companies Act? The schedule 3 of Companies Act. Okay. Schedule 3 of Companies Act. Schedule 3 of Companies Act talks about the format of financial statement. Talks about the format of financial statement. What is this financial statement? What is format of financial statement? The basic rule of financial statement will never change. Basic rule: assets, liabilities. Asset has debit balance, liability has credit balance. We know it. The basic rules of accounting will never change. Here, the Schedule 3 of Companies Act talks about the format of financial statement, and that Schedule 3 is a part of company's financial statement chapter that we will discuss. Next chapter is company financial statement, where we will discuss in detail what is this Schedule 3, What the financial, how we prepare, what is the format of this schedule 3? The format of financial statement that should be followed by company, the format for profit and loss account, the format of balance sheet. In your at your foundation level or at your graduation level, if you are doing this intermediate preparation after graduation. So in foundation or in graduation, maybe you have prepared, in foundation 100% you have prepared the financial statement. But in foundation, when we have prepared the final account, that we have prepared normal, that of proprietorship firm or partnership firm, okay? Normal trading account, P&L account and balance sheet. Basic accounting rule will never change. But when we prepare the financial statement of company, the format is different. So that is the part of next chapter. But here in these chapter, that is of buyback option, balance sheet will come. But don't worry about the balance sheet. So don't worry about the format of balance sheet. This is liability side. This is liability side. And this is asset side. So schedule 3 says first we have to write it down equity and liability. This is liability side. This is liability side and this is asset side. Okay, this is liability side and this is asset side. Now what happened here? On liability side, they give the heading equity and liability. So do you remember that here, suppose this is your liability. Just give me 1 minute. This is your liability. This is your balance sheet. Okay, normally when you prepare balance sheet, this is your liability side and this is your asset side. What we write down on liability side? Capital. So here we call it share capital. Share capital. We write it down some profit which belongs to the owner. We call it here reserve and surplus. So reserve and surplus. When you prepare normal balance sheet, okay, of proprietorship firm or of partnership firm, that profit belongs to the owner. But here also the profit belongs to owner. Owners are shareholders here. But we don't write it down in share capital. We prepare a separate heading for it. We call it reserve and surplus. Okay. So here long-term borrowing, current liabilities. So you can see here that this share capital, reserve and surplus, then long-term borrowing, you can see here the current liability, you can see the same thing, liability side. But you are writing like this: equity and liability, shareholders, we give heading here, shareholders fund, non-current liability and current liability. Okay, now asset side, this asset side, non-current asset means long-term asset, property, plant and equipment. To fixed asset, now at inter level, we don't call it fixed asset, you will call it as property, plant and equipment, because there is the accounting standard 10, that accounting standard 10 don't call fixed asset, they call it PP, property, plant and equipment. So you can see this asset, fixed asset is PP is fixed asset. Non-current investment means long-term investment. Then current asset, inventories, trade receivable, cash and cash equivalent. So here there is a different way of presentation of balance sheet. That's it. But a detailed discussion of schedule 3 we will do in next chapter, that is financial statement of company. For these chapter you just have to know that this is the format of financial statement of company. So first they write it down here, liabilities, equity and liabilities, and then assets here. That's it. Okay. So here they've given that balance sheet. This balance sheet is before the buyback. So shareholders fund, share capital, note 1. What is note 1? We'll discuss. Note 1, 1200. And remember one thing, these figures are in lakhs. So do the correction there. Write it down, rupees in lakhs. Write it down in your note, in your book, rupees in lakhs. Rupees in lakhs. So rupees in lakhs. Rupees in lakhs. So here we have rupees in lakhs. So share capital 1200, reserve and surplus note 2 810, non-current liabilities, long-term borrowings note 3 750, current liabilities, trade payable 745, other current liabilities 195. This total of liability side. Asset side, non-current asset means long-term asset, property, plant and equipment 2000, note 4 2026, non-current investment 74, then current asset, inventories 600, trade receivable 260, cash and cash equivalent 740. And you can see a total of liability side, total of asset side 3700. Now what is this note when they say note 1, 2, 3, 4? So they have given note for share capital, reserve and surplus, long-term borrowing and property, plant and equipment. So note means there are some detailed information. Here you can see share capital is 1200, but the detailed information of this 1200 given in note 1. So you can see here notes to account. You can see here notes to account. So these are notes to account. Notes to account. You can see here now share capital. Share capital. So authorized, issued and subscribed capital. Equity share capital, fully paid up shares of rupees 10 is 1200. So they have given us the information of this 1200 that there are equity share of rupees 10 each. Now they have given the information of these total 810. You can see here note 2. You can see here note 2 is related to reserve. Note to 810 is related to reserve and surplus. Note 2 810 is related to reserve and surplus. So here you can see reserve and surplus, securities premium balance 175, general reserve balance 265, capital redemption reserve 200, profit and loss account 170. So total is 810. The total detail of this 810 given, these reserves cover under reserve and surplus. Now note number 3 is related to long-term borrowing. In long-term borrowings, they have 12% debenture of rupees 750. Okay. Now here you can see note number 4. Note number 4, that is 2026. Note number 4. Note number 4. How much they have in note number 4? 2026. So here they given us the details here. Property, plant and equipment. So land and building is of rupees 1800, plant and machinery is of rupees 226, and net carrying amount. Carrying amount means book value. Okay, carrying amount means book value. There is 2026. They use the word net because it is after the obviously adjustment of depreciation. So here it is a WDV. Okay, that's why they use the word net. Anyways, the total of land and building, plant and machinery, that's come 2026. So the balance sheet is given and notes to account is given. And this balance sheet is before the buyback. Now the adjustment is given here. On 1st of April 2021, the company announced the buyback of 25% of its equity share at rupees 15 per share. So on 1st of April 2021, the company announced the buyback of 25% of its equity share at rupees 15 per share. So now company doing not 100%, just 25% of its equity share they are doing the buyback. At what price they are doing buyback? They are doing buyback at rupees 15 per share. What is the face value of share? Face value of share which is given in question is rupees 10. How much is the face value? The face value of share is rupees 10. And they are doing buyback at rupees 15. It means face value is rupees 10 and they are doing buyback price, buyback price at rupees 15. It means how much is premium on buyback? Premium on buyback is rupees how much? 5. So premium on buyback is rupees 5. Okay. Now for this purpose it sold all of its investment for rupees 75 lakh. So they sell all of its investment for rupees 75 lakh. So you know that what entry should we pass when we do the sale of investment. Here they have sold the investment at rupees 75 lakhs and the book value of investment is not 75, it is 74. So they sell the investment of rupees 74 lakh. They have sold the investment of rupees 74 lakh at rupees 75 lakhs. What does it mean? It means that there is a profit of rupees 1 lakh. It means that there is a profit of rupees 1 lakh. Okay, so there, okay, we'll record it. Okay, now this is about on 1st of April 2021. Now this is about 5th of April 2021. The company achieved the target of buyback. What do you mean by company achieved the target of buyback? There are some tests that should be fulfilled by company before the buyback. Those conditions are related to resource test, shares outstanding test, and debt equity ratio test. So we don't have to worry about those tests. We have not yet discussed about those tests yet. We'll do it later. We will discuss about those tests also. There are some conditions. Apart from those tests, there are some other conditions also, like it should be authorized by article of association. There should be a special resolution. So all those conditions are fulfilled. Okay. So on 30th of April 2021, the company issued one fully paid up equity share of rupees 10 by way of bonus shares for every 4 equity shares held by the equity shareholder. Now what happened here? Now understand the cycle here. Understand it. So whatever I write, this is the study material. So whatever, this is a soft copy. So whenever I write anything here, you have to write it down, the material you have. Okay. So understand the cycle here. What happened here? Understand the cycle here. What happened here? Let me write here. Okay. This is question number. So here, question number, today is day 2. Question number 1. Okay. We are doing a buyback of, it is a notebook, buyback of securities. Give the heading new chapter in your notebook, buyback of securities. All the concept we write it down in study material. Okay. So buyback of securities. Give the heading buyback of securities. We are solving question number 1, which is given on page number 7. Which is given on page number 7. So we'll write it down like this. Question number 1 on page number 7. Question number 1 on page number 7. Okay. So question number 1 on page number 7. Now understand this point. What happened here? Understand the cycle here. And you don't have to, just one. Okay. You don't have to draw this cycle in examination. So I'm using the red box here. Why I'm using this red box? To understand the cycle here. You don't have to write it down in examination. Okay. Now understand this point. What happened here? The company announced for the, first let me write it down. Okay. Listen. So on 1st of April 2021, the company announced for buyback. You can see announced for buyback on 1st of April. They have announced for buyback 25%. They are doing the buyback and they have also sold the investment. So announced for buyback and investment sold So announced for buyback and investment sold on 1st of April. Here on 5th of April 2021, they have actually done the buyback. How much buyback they have done? They have done the buyback just 25%. Okay. So how much capital they have? If this is the amount of capital. This 1200 is the amount of capital. But if I calculate this on number of shares, this 1200 is amount of total capital and rupees in lakhs. Okay. 1200 and the value of one share is rupees 10. Value of one share is rupees 10. So 1200 divided by 10, that's come 120 shares. 120. Basically it is 120 lakhs shares. Because all figures here are in lakhs. You can see here rupees in lakhs. This 1200 is in lakhs. Okay, the divided by 10 share of one share is of rupees 10. So how many shares here? 120 lakhs shares. So we are doing buyback here 25% only. So 120 lakhs shares. We are doing buyback of 25% only. So 120 multiplied by 25%, that's come 30 lakh shares. 30 lakh shares. So we are doing here buyback of 30 lakh shares. So here on 1st of April, we have announced for buyback. Here on 5th of April, we have actually done the buyback. But it is mentioned in question that here later on, that is on 30th of April 2021, the company has actually issued the bonus shares. So bonus shares for every 4 shares, they have given them 1 share. So suppose you are my shareholder your existing share. For every 4 share, I am giving you 1 share as bonus shares free of cost. So here on 30th of April, here on 30th of April 2021, 30th of April 2021, I am giving bonus shares. I am giving bonus shares. Okay, I am giving you bonus shares. Now understand this point. When I am giving you bonus shares, okay, but how many shares actually exist when I am giving you bonus shares? The total number of shares company has before buyback 120 lakh shares. The company has 120 lakh shares. Out of 120 lakh shares, I have repurchased it. I have buyback it. I have repurchased it 30 lakh shares. So out of 120 lakhs, 30 lakh shares, buyback, okay, buyback. Out of 120 lakh shares, I have repurchased. How many shares I have repurchased? 30 lakh shares I have repurchased. So how many shares I have? I have now, at the time of buyback, I have just 90 lakh shares. How many shares I have? 90 lakh shares. Because out of 120, I have repurchased 30 lakh shares. So how many shares I have? 90 lakh shares. For every 4 share, I am giving you, for every 4 shares, I am giving you 1 share as bonus share. So you have 90 lakh shares. For every 4 shares, I am giving you 1 share as bonus share. So 90 divided by 4, that's come 22.5. Don't tell me, sir, it is 0.5. How can you give the shares in fraction? We cannot give shares in fraction. But here this 22.5 lakhs, it means 22 lakh 50,000 shares it is. The shares are not actually in fraction. So it's 22 lakh 50,000 shares, 22.5 lakhs shares. Okay. So here, this is summary of this question. Okay. So why we have given bonus share for this 90 lakh shareholders to this 90 lakh shareholders only? Because out of 120, 30 lakh shares you have already buy back here. How much left? 90 lakh shares left. How many shares left? 90 lakh shares left. So 90 lakhs for every 4 shares we are giving them how many shares? 1 share. So for every 4 shares we are giving them 1 share. So how many shares we have? 22.5 lakhs shares we have given as bonus share. Now we have to pass journal entry. So first they have asked us to pass the journal entries and then we will discuss about the balance sheet. So write it down there. The first that they have asked you, journal entries. In the books of KG Limited, rupees in lakhs. Now draw these for at least for 1 page it will take. Okay. So draw the at least for 1 page. Okay. You draw for at least 1 page. Okay. Okay. So rupees in lakhs, debit, credit. Okay. One more column of date also. Okay. Okay. Now write down one by one. So first we are doing the entries for buyback. That is on 1st of April. Actually we have announced, but we'll do the entry for buyback on 5th of April. Before that we have sell the investment here. So here on 1st 2021 April 1st. 2021 April 1st. We have sell the investment. How much is the book value of investment? The book value of investment is rupees 74 lakh, and we have sold the investment at rupees 75 lakhs. So investment of rupees 74 lakh we sold at rupees 75 lakh. It means there is a profit of 1 lakh. So bank account debit. First, bank account debit. How much you have received? 75 lakhs. Bank account debit. 2, investment account. What is the book value of investment? 74 lakh. This is the profit of 1 lakh. This profit we transfer to P&L account. We can write it down, profit and loss account. In bracket you can write it down, profit on sale of investment. Profit on sale of investment. Okay. Being investment sold, being investment sold on profit, being investment sold on profit, being investment sold on profit. Okay, now on 5th of April, we have actually done the buyback. Now understand this point. When we have purchased the, when we do the buyback, how many buyback we are doing? 25%. So how much is 25? That is 30 lakh shares. How much? 30 lakh shares. So here 30 lakh shares. So 120 lakh shares, 25% buyback. It means 30 lakh share. We are purchasing it. We are purchasing at what price? 15 rupees. So do you remember those journal entries that we have discussed here? When you purchase it, equity share buyback account debit to bank account. Equity share buyback account debit to bank account. But we are purchasing not at rupees 10 per share. We are purchasing at rupees 100 we are purchasing not at rupees 10, we are purchasing at rupees 15. Okay. So here, write down here. We have purchased equity shares. So equity share buyback account debit, equity share buyback account debit, 30 lakh shares we have purchased at rupees 15. So 30 lakhs multiplied by 15, that's rupee, all figures are in lakhs. That's why don't write 30 lakhs. No. 30 lakhs, don't write normal figure. Okay. The rupees in lakhs, so that's 450 lakhs. 30 multiplied by 15, that is 450. So equity share buyback account debit to bank account. How much it is? 450. So here being the payment made on account of buyback of 30 lakhs equity shares. 30 lakhs equity shares. Okay, 30 lakhs equity shares. Okay, 30 lakhs equity shares. Now we have to cancel it. Now what will be the next entry here? We have purchased it. The next entry is the cancellation. Whether we have purchased at par or premium, we have purchased at premium. Whether we have purchased at par or at premium, we have purchased at premium. So now we will cancel it. Equity share capital account, it should be debited by face value. So face value is 10. Premium is how much? 5. To equity share buyback account. So write down here next entry. Here equity share capital account debit. Equity share capital account debit. 30 lakhs shares. Face value is rupees 10. Premium on buyback account debit. 30 lakh shares of rupees 5. So 30 multiplied by 10, it's come 300 and it will come 150. 2. Equity share buyback account. Equity share buyback account. Total is 450. So if you observe here, so first you have debited equity share buyback account here by rupees 450 and you have credited here equity share buyback account by rupees 450. Okay, so that equity share buyback account get cancelled. First you have purchased it and then cancel against share capital. Okay, so remember, always we record in equity share capital account, always we record at face value only. Because when you issue shares, you record at face value in capital account. Okay, now the premium that you have paid at the time of buyback. So here the premium on buyback is rupees 5 per share. Write down narration here. Being cancellation of shares bought back. Being cancellation of shares bought back. Being cancellation of shares bought back. Okay, being cancellation of shares bought back. Okay, now we are here on 5th. We have repurchased it. Okay, we are in buyback. Remember one thing. Now, before we come to 30th of April, that is for the bonus issue. Whether any information, first you have to know whether this buyback is out of profit or out of fresh issue of shares. So we will call it out of fresh issue of shares only and only when it is mentioned in question that they have issued some shares in the market. If nothing is mentioned about the issue of shares, then we have to assume that it is out of profit only. So here, whether any information is given that they have issued any shares in the market, the answer is no. If it is not mentioned that they have issued any shares in the market, so what we will call it, it is buyback of shares out of profit. So when we say it is buyback of shares out of profit, then we have to pass entry for this transfer to CRR account. So we will transfer it to CRR account also. But remember one thing, the premium on buyback, if you have, that has to be adjusted. That has to be adjusted against, you can adjust against securities premium, you can adjust against penal, and you can adjust against generalism. So whether we have balance in securities premium, just 1 minute. Whether we have any balance in question, if you see whether we have any balance in securities premium account, yes. So you can write it off, that's premium and buyback against security premium, general reserve and penal. So we have 175 in securities premium, 175. How much we want to write it off? How much we want to write it off? We want to write it off 150. How much we want to write it off? We want to write it off 150. So next entry will be to write off premium on buyback, that can be write off against securities premium, that we can write off against general reserve or penal account. So we have enough balance in securities premium account, that is 175, and we want to write off 150, so we can easily write it off. So next entry, write down next entry is, and same if we are passing all these entry on 5th of April only. So securities premium account debit, securities premium account debit 150 to premium on buyback account, premium on buyback account 150, premium on, so securities, so you have debited here premium on buyback account by rupees 150, and then you have cancelled this premium on buyback account by crediting here. Okay, so write down here, being premium on buyback adjusted against securities premium account, adjusted against securities premium account. Okay, adjusted against securities premium account. Now we have passed these entries We have passed these entries, that first for the purchase of these shares, and then cancellation, and then write off there's a premium on buyback. Against we have enough balance here in securities premium, so we have write it off against securities premium. Now we have to transfer to CRR account. We have to transfer to CRR account. So why I am saying that we have to transfer to CRR account? If nothing is mentioned about the issue of shares, then we will assume that it is out of profit only. So what we will call it? It is out of profit only. Okay, we will call it is out of profit. If it is out of profit, we have to transfer to which account? We have to transfer to CRR account. But when you transfer to CRR account, you can utilize general reserve, you can utilize profit and loss account, and you can utilize securities premium also. But remember one thing, I have observed that institute, when they transfer to CRR account, generally they don't utilize securities premium account. I mean to say, it is not prohibited here at the time of buyback to utilize securities premium account to transfer to CRR account. But I observed that institute utilize securities premium account to transfer to CRR only as a last resort. What do you mean last resort? It means that first they give preference to general reserve, profit and loss account. If they don't have balance in general and profit and loss account, general reserve and profit and loss account, then at lastly they transfer it to, lastly they utilize securities premium account. So don't give the preference to securities premium account. First give preference to general reserve or profit and loss account. If you don't have balance in general reserve or in profit and loss account, then only utilize the securities premium account. So how much amount should we transfer to CRR account? We will transfer to CRR account the face value of equity shares buyback, that as per law we have to transfer to CRR account. How many shares that we have buyback here? The face value of shares that we have in buyback is 300. So face value, equity share capital. What is the face value of the shares of buyback of share? Is 300. So 300 should be transferred to CRR account. Now if we see in question whether we have 300 in general reserve P&L account. So note 2, we have balance of rupee 265 in general reserve. So we will utilize 265 of general reserve, and in P&L account the balance, surplus balance of P&L account is how much? 170. So what we will do, we will utilize 265 from general reserve, we will utilize 265 from general reserve, and total how much we require to transfer to CRR? 300. That is face value of buyback of share, that is 300. So out of 300, 265 will be utilized from general reserve, and remaining 35 we will utilize from profit and loss account. Again I am saying, when you do buyback, out of profit we have transferred to CRR account face value of buyback of share. You can utilize securities premium account, but I have observed that the ICAI utilize securities premium account in their solution generally when they have no other option. It means that when they don't have enough balance in general reserve and profit and loss account, then only they utilize this securities premium account. So we will do the same here. So we have enough balance in general reserve, that is 265. Total we require 300, and remaining 35 we will utilize from profit and loss account. So write down here next journal entry, that is general reserve account debit, general reserve account debit 265, profit and loss account debit. So total we require 300. Out of 265 we have adjusted against general reserve, 35 out of profit and loss account. 2, capital redemption reserve account, capital redemption reserve account, capital redemption reserve account is how much? 300. So being amount equal to face value of buyback of shares, face value of buyback of shares transferred to capital redemption capital redemption reserve account as per law. As per law. So now we have passed all the journal entries for buyback of shares. Now it is also mentioned in question to do what? They have also issued the bonus share. So we have also do the accounting of issue of bonus share. So I hope all of you understand this, the entry of buyback. Now here, for your reference, I am writing here that these entries is of what? Buyback. Now we are doing accounting for now bonus. So we have already discussed about the bonus shares entries also. So how many bonus shares they are giving? They are giving bonus share 22,50,000. Okay, for every 4 share they are giving 1 as a bonus share. So 90 lakhs is the total number of shares. 90 lakhs is the total number of shares. So for every 4, 90 lakhs total number of shares which is existed on the date they are issuing bonus share. So they have 90 lakh shares because out of 120, 30 lakhs they have done the buyback here on 5th of April only. So here 90 lakhs for every 4 share they are giving how many shares? They are giving 1 share. So 90 divided by 4, 90 divided by 4 multiply by 1, that is 22.5 lakh shares. 22.5 lakh shares. Okay. So 90 divided by 4 multiply by 1. 90 divided by 4 multiply by 1, that's come 22.5 lakh shares. Okay. So here what entry do we pass when we issue bonus shares? We have discussed about it today. So here first we have to, because we cannot say bank account debit, so we have to utilize reserve, and the most we can utilize for the issue of bonus shares, we first preference should be given to CRR only. You know why? Because CRR account is the most restricted reserve. It can be utilized only and only for the purpose of bonus issue. Now if we are issuing bonus share, so don't you think should we first utilize CRR account, because it can be utilized only for the purpose of bonus issue and we are issuing bonus share, so let's utilize the CRR account first. But how many bonus share? 22.5 multiply by 10, that's come 225. Okay, so whether we have balance of 225 in CRR account, so we will see here in yes, we have already here 200 balance you have here in CRR account. Okay, and it means in past you have done some buyback. So in past you have balanced 200 in your CRR account, and here also you have transfer in CRR account. Now here how much you have transfer? 300. So 200 you already have and 300 you have transfer. How much total? You have 500 now. How much we require? 225, 22.5 multiply by 10, that's come 225. So 225 we require and we have 500 because already given in balance sheet 200 and we have transferred just now 300. We have total 500 in CRR. So now we are issuing bonus share. So whenever I say utilize reserve, we are cancelling, we are reducing that reserve. Reserve has credit balance, and when we utilize, we have to debit it. So we will debit here, that is on April 5th, April not 5th, 30, April 30, capital redemption, reserve account debit, capital redemption, reserve account debit, that is 22.5 lakhs shares multiply by 1 is of rupees 10. 1 is of rupees how much? 10. I will make a working note on how I have calculated this. We will make a working note on it. We can write down here working note 1. I will prepare on how many number of buyback. This here we have discussed roughly. We'll make a working note on it. Don't worry. Okay, so this 22.5 lakhs. We first working note on the number of buyback of shares. Second will be on bonus shares. Write down here working note number 2. Okay. So first will be on how many number of shares we are doing buyback. Okay, number that is 30 lakh shares. Okay. So here, just 1 minute. Write it down here. Working note number 1 here. So this working, how we have calculated this 30 lakhs. Okay, 30 lakhs. We will make a working note. So this is working note number 1. Working note number 1. This is working note number 1. Equity share buyback. Okay, working note number 1. And this is working note number 2. So it will come 225. 225. So equity share capital redemption reserve account debit to bonus to shareholder. Now bonus to shareholder. We are liable to pay something to something to shareholder. So we call it bonus to shareholder account. We are liable to. It's a liability. Increase in liability, credit. So being the utilization of capital redemption reserve account, capital redemption reserve account to issue bonus shares, okay. Now first we have credited here to bonus to shareholder account. First we have credited here bonus to shareholder account. Now we will cancel it. We will give them, actually we will allot them shares. So here next entry, a bonus to shareholder account, debit 225 to equity share capital account, to equity share capital account 225, being issue of one bonus equity share, being issue of one bonus equity shares for every 4 equity shares, every 4 equity shares. So here we are giving them, we have allotted them shares. So first we are liable to pay to shareholders. So first we have credited here bonus to shareholder. Now you have debited here, so you have cancelled it. So ultimately what entry you have passed? You have passed reserve account debit to equity share capital. Yes or no? Reserve account debit to equity. You have cancelled this bonus to shareholder. But first we have to pass entry due and then actual allotment. Okay. If you see here, so to make it, just 1 minute. What entry do? If we give the net effect, so what entry, we cannot pass bank account debit to share capital because we are not receiving any amount here. So what entry we have passed? CRR account debit to equity share capital, because these get cancelled. Na? Bonus to shareholder, first you have credited it, but you have to pass entry like this only. Yeah? We are liable to pay. So credit, increase in liability, credit, and then you have debited, decrease in liability. So this is all about the journal entry that we have passed. Now remember one thing. What happened here? As I told you yesterday that section 68 says that replacement of capital should be capital. In every question you have to cross check it at the end. So replacement of capital should be with the capital. So here if you observe, what do you mean by replacement of capital should be with the capital? Here you have debited this share capital by rupees 300. So what is this 300? This is decrease in capital. This is decrease in capital. Yes or no? Yes. Decrease in capital. So with the same amount, capital should be increased also as per law. So here we have not issued any shares in the market. So there is no increase in capital right now. But there is increase, there will be. But here what happened? Here you have transferred to CRR account. Here you have transferred to CRR account. So if you have transferred to CRR account, there will be increase in capital. Increase in capital at the time of issue of bonus share, because CRR can be utilized only and only for the purpose of bonus issue. There will be increase in capital at the time of issue of bonus shares. Increase in capital at the time of issue of bonus shares. Okay. So you have decreased the capital by rupees 300, and not immediately you have increased the capital by rupees 300, but you have transferred it to CRR account. That will be ultimately converted into equity share capital account only. Okay. So here there will be a replacement of capital with capital only. So out of 300, you have issued the equity share of rupees 225 now. So remaining will be issued later. So remember, At the time of buyback, there is a decrease in capital. But at the same time, there should be increase in capital. It is as per law. It is a requirement of Companies Act. So that increase in capital, if you issue the same number of shares in the market, immediately there is an increase in capital also. But if you are not issuing share in the market, we are doing buyback out of profit. In that case, as per law, we have to transfer to which account? We have transferred to CRR account. So we have transferred the same amount, 300 to CRR account. Remember this. Okay. Now we will prepare working note. So there are two working notes. You already know about it, how many number of buyback of shares and how many number of that is bonus shares. Just make a working note on it. Working note. Working note. Number 1. So number of buyback of share. Number of buyback of shares is in lakhs it is, okay. So total shares, number of shares they have, total amount of share capital is 1200 and face value of one share is rupees 10. So how much it is? 120 lakh share. 120 lakh shares. So here buyback of shares equals to 120 lakh shares multiply by 25%, that come 30 lakhs share. Working note number 2, number of bonus shares allotted, total they have 120 lakhs, out of 120, 30 they have done the buyback. So for every 4 shares they are giving 1, that's come 22.5 lakhs shares. 22.5 lakh shares. How much they have? 22.5 lakh shares. Okay. Okay. All of you 22.5 lakh shares. Okay. 22.5 lakhs shares. Okay. Then. Now they have also asked you to prepare what? They have also asked to prepare what? Balance sheet. Now I am giving you break for 10 minutes and then we'll start preparing of what? Balance sheet. We'll start preparing of what? Balance sheet will start. Okay. Now you have break for 10 minutes.